On Channels Television, where the markets speak and we analyze. I'm Bill Ibang. Let's check in on equities performance this week, but we begin with markets outside Nigeria. First up, Europe, where we see the DAX. That was up 0.56% to end Friday. We see FTSE in London, that was also up 0.64%, and the CAC 40 in France, that was also up 0.37%. Let's look at Asia markets now, see if they fared as much as we saw in Europe. We see the Nikkei was down 0.3%. Shanghai, that index was also down 0.04%, and the Hang Seng, that was up, however, 1.21%. Now let's look at U.S. markets. Dow Jones closed the week, that was Friday's, up 0.98%. S&P 500, that was also up 0.43%, and we see the Nasdaq, that was also up 0.44%. Let's zoom in now to Nigeria. The NASD index, as the unlisted equities market here, ended the week lower, whopping 4.57% drop for that index to close at 4,261 points. Market cap at 2.56 trillion naira. We see activity that was down as well. Volume dipped 75.02%, stand at 1.95 million units. Traded value down 74.13%. To close at 170.17 million naira, and we see all transacted in 153 deals. On the gainers chart, we see Golden Capital PLC that led that rise there, 2.78% up for the week. We see Afriland Properties also up there, Industrial and General Insurance. Weekly decliners, we see Central Securities Clearing System that led the losers. Posted the steepest loss, 16.55% down to close at 83 naira. And Franklin Campina Wamco, that's also in the losers chart, 9.98% down. Food Concepts also down 6% for the week. Now, looking at trades that dominated, in terms of the top trades, the CSCS, Franklin Campina Wamco, and Industrial and General Insurance, they dominated trading. Now let's zoom in on the NGX to see how they performed. The extended losing streak we've been seeing, closing lower in 4 out of 5 trading sessions this week. Heavy selling in major stocks, including First Holdco, Stanbic, Aradel, and GTCO. They pushed the all-share index down 1.4% to 239,351 points. That's left the market down 2.4% so far this month, and we're hoping, but still up 53.8 for the year to date. Now, trading activity that slowed. We saw volume falling 48.3% and traded value down 4% week on week. Sector-wise, we see oil and gas, insurance, banking stocks, they led the declines, while we saw consumer goods that edged higher. Now, Central Securities Clearing System, CSCS, we're looking at stories that made some of the headlines this week. They're looking at a restructuring, reviewing its fee structure to improve efficiency and also encourage market participation, and to keep services in step with changes in Nigeria's capital markets. Now, speaking on Business Morning, the CSCS Managing Director and Chief Executive Officer, Mr. Shehu Yahaya Shantali, says the review will balance affordable fees for market participants with the cost of maintaining and upgrading market infrastructure. Let's take a listen.
CSCS and other stakeholders in the market, and credit to our regulator. We reached out to our regulator and our other stakeholders, and we've realized that we need to reduce the fees in the market. Now, it doesn't make sense that we're trying to grow the market and people are complaining about fees. So one of the things we have done is we've looked inwards and we've agreed on reduction of those fees. The reason is to encourage that adoption and for people to come into the market seamlessly and be able to trade in the market. Our focus is like the future, so we're actually investing in the future. So I'm glad to say that I don't want to preempt that, but in the next few days or next few weeks, you would see communication from the CSCS.
That's supposed to be good news for the markets, lowering costs for investors. That actually makes more returns for them instead of having to pay more to invest. We've seen that more is happening, because this week we saw last week, we saw the CBN reopen its open market operations to ordinary Nigerians. And for the first time in 7 years, now until recently, that's OMO, that's the OMO open market operations market, was largely out of reach for individual and corporate investors. But that changed on August 12 when the CBN reopened that securities to individuals, corporates, and non-banking financial institutions through their banks. So what does this mean for investors? How does the OMO market work, and how can you take advantage of this new opportunity? Joining me to discuss this is Caleb Alimi, Chief Dealer at ProvidusUnity Bank. Caleb, welcome to Capital Markets once again.
Thank you for having me, Will. It's a pleasure to be here.
So Caleb, for 7 years, individuals, retail investors, non-banking institutions were locked out of the OMO market. And we were just wondering why, as the CBN, chosen this exact moment to reopen it, especially with elections approaching. Can you tell us something we don't know?
I'm not exactly in the minds of the CBN, but we can infer from part of the things that we've seen this central bank, regime do. Part of the things they've done and all of the moves they've made since they came into operations, it's been forward-looking, forward-moving. They've been trying to restore the market to some sort of normalcy. I call it best practices around the central bank, around the central banks. So what we've seen from their intervention into the FX market, liberalizing the FX markets, putting some sanity around that, implementing a new trading platform, which is called the NFM, through the BMAT that banks are trading, and all of the policies that they've just been putting in place are sort of been, stabilizing the market. And so that's why we give this central bank a lot of credit. They're very pro-market central bank, and they're pro-best practice as well. So I would like to think, just restoring the market to how things were is why they've made the move at this time. And there are a few things that have influenced that or that have encouraged them to do that. Part of it is the appreciation in the currency. Before now, as you know, it was open to just banks and FPIs. The idea was to, reduce the money supply in the system, reduce the amount of, money chasing the dollar. But they found that, when they've been able to sort of control the demand to only valid transactions. Okay. Now the exchange rate is, appreciating, the currency is stable. It's been stable for about 2 years, and this, there's been a lot of normalcy return. So I think it's a good time as well for them to open it to the entire market.
But some analysts are calling this the return to monetary orthodoxy. Do you agree with that?
Yes, I do agree, and that's exactly what I've been saying, that they're returning to, orthodox monetary policy practices, which is like best practice. And like I said, part of the other things they've done, many of the things they've done, continue to lead up to this and continue to show that they are this type of CBN. They're very transparent, they're very pro-market, and they're, like I said, best practice as well.
But is this really about returning to the normal practices, or is this about solving a specific maybe liquidity issue they've seen in the market?
No, 100%. There is. We need to look at what open market operation is to then look at it from the angle of, before we then look at it from the angle of liquidity. First of all, open market operation is an intervention by a central bank to control money supply in the system, right? So oftentimes when they introduce this, they take out money from the system. So liquidity-wise, is there a lot of money in the system? Yes, there is a lot of money in the system. Money supply, continues to grow. Money outside banks continue to grow. But this year, they've done a great, work of that. If they're expanding their net to even bring in more, I think they've done a lot with the banks already, and then doing this with further individuals. I think, it improves their hold on controlling money supply.
Okay, so let's just walk us through maybe an ordinary Nigerian just listening to this, watching this on TV right now and say, okay, what's OMO? I'm sure definitely it's not detergent, but you want to know what it really is. So if let's say I have 500,000 naira, just give or take, I have 500,000, I want to buy an OMO bill today. Can you tell us what actually happens between me, my bank, and the CBN? How does this whole thing work?
Okay, so the way it works is the central bank looks at the money supply and says, okay, today I want to take out, say, 2 trillion from the money in the financial markets, and they make that announcement through what is called an auction to the banks. Your bank should probably notify you. Oftentimes, these windows are very short. The auction may open at 10:30, close at 11 o'clock, or may open at 10:30 and close at 11:30. But the windows are often short, mostly a 30-minute window. Maybe they announce it, give us 1 hour to prepare for it. So your bank cascades the information to you, and then you tell them, you put in your interest. However, an open market operation is still a single bid operation, such that the bank can only present one bid, right? Just one bid for a particular maturity. So the bank can more or less understand that you have the demand, but go as one, with one bid. So the bank can go and submit maybe an auction of maybe like a 50 billion, for example. So when you go to your bank and say, I want to buy open market operation bill, they should be able to, sell to you what I think is the secondary market, because it's the primary market the first time is issued. So the first time the central bank is issuing that, it's a primary market activity. And then when your bank is selling to you, it becomes a secondary market activity. So yes, if you approach your bank, walk into any of your bank branches and say, I want to buy open market operation, they should be able to tell you, these are the maturities that are available, and then, make it available to you.
It said it was open for the auction and the secondary market. So you say we are now only buying from the secondary market because the banks are the primary, they actually are the ones
Correct.
who approach the CBN. So how does this now work? We're not buying directly at the auction?
You cannot buy from the auction because you cannot bid. Only the banks can bid.
Okay.
So at the end of the day, the bank probably is acting as your agent. But again, because they're not going to wait and accumulate all of the 500,000s, 1 millions, they will just go and present a bid, and then the individuals can come buy from them. But when we get to a point where OMO is announced, maybe a day if he's given like a day interval, 2 days interval, like the Nigerian Treasury Bills, that has a standard calendar that is published every quarter that you can plan towards. That's a different type of instrument. If it was that type of instrument, if OMO returns to that type of activity, then you can probably buy from the primary market. Again, it's difficult because it's a single bid auction. The bank can only present one bid.
So how are they going to be able to satisfy several bids? If say several Nigerians, several retail investors, we have a lot of people in Nigeria, and they say, I'm interested in buying the OMO. So if they can only present one bid, how do you satisfy the needs or meet the demands?
Again, the banks will carry everybody's weight on their back and then present one bid. And at that bid rate, whenever they win, or if they're successful at the auction, then they chunk it down to every other person.
Okay. So now let's just look at some examples that you've given us in some of your notes. Give an example of 900,000 naira today and get back 1 million in, say, 6 months. So let's give the tenor of 6 months. Walk our viewers through why the 100,000 naira gap, is not the traditional interest rate. In that sense, like, why is that 100,000 not the traditional interest rates? Why is it giving? Why am I paying 900 and getting 1 million when I'm buying 1 million? So how can you explain what that means? Really?
Let me take you through that.
Okay.
So retail investors need to understand what they're investing in, and they're not new to it because they invest in Nigerian Treasury Bills. Nigerian Treasury Bills and OMO bills have the same properties. They have the same behavior, they just have a different issuer. The Nigerian Treasury Bills is issued by the federal government, albeit managed by the central bank. Open market operation is a central bank initiative, a central bank monetary policy intervention. However, they are both discounted instruments. What it means is that interest is sort of paid upfront. That is how the layman understands it. And that's why we say, okay, you want to make a million naira investment, that is the face value. Let's assume at an interest rate of, say, for simplicity, I'll just use very light examples. For simplicity, you're buying 100,000, you want to invest 100,000, or let's use 1 million, and the interest you're supposed to earn over that period is 100,000. At the point where your bank will be taking the money from you, they would just take 900,000. So what you can see, excuse me, you can look at it like the bank took 1 million naira from you, but credited you with 100,000 immediately, which means you've lost or you've parted with a net of 900,000. And then 6 months from now, or the time when it comes to maturity date, you get your face value back. That 1 million or that 500,000, that amount you've said you want to invest is called your nominal value. And then when the interest rate is applied for the tenor that you've applied for, then you get an interest which is paid to you upfront, which is like a discount. Think of it like walking to a store and you want to buy a purse. You know, and they say, oh, this purse is $100 or is 100 naira, sorry.
Okay.
However, today you can pay 90 naira.
Okay.
You know.
So I keep 10 naira to myself.
Exactly.
So that 10 naira, is it interest or is just free money?
That 10 naira is, let's call it intrinsic value of the bag. You know, the market price for that bag is 100 naira. However, you're paying 90 naira today. If you want to sell the bag tomorrow or 6 months from now, the worth of the bag is 100 naira.
Okay, so the interest I will still get. Now, you mentioned the 100,000 naira that will be discounted, that the bank would keep back in my account and take 900,000 from the 1 million. So when you're paying the interest, does that 100,000 still count as my interest, and I'll still receive more interest?
The 100,000 is already your interest.
Okay, so do I still get more interest?
No, you just get 1 million naira back.
I just get 1 million naira.
Correct.
So I still get 100. That I still get 100,000 naira.
So you have your 100,000 naira today.
Okay.
You know, and then because of time value of money, that 100 naira in your pocket today is definitely worth more than 100,000 in your pocket, you know, 10 days or 10 weeks from now, you know. So that time value of money, when you get that 100,000 today, you know, it gives you, that's your return. However, the 1 million comes to you, you know, at maturity.
When you say 1 million, remember they took 900,000 from me.
Yes.
So they're giving me back 1 million.
No, let me simplify it. So they took 1 million naira from you.
Okay.
And then paid you 100,000 naira interest.
Fantastic.
Immediately.
Okay, so I get my interest up front.
Correct.
I don't have to wait, maybe
Not
say
at all.
biannually for the interest to come in.
No, you don't have to
I
wait.
get my interest now
Today.
and still get my 1 million cap face value.
6 months. Yeah, at maturity.
Fantastic. This is actually very interesting. I just wanted you to break it down.
That's exactly what it is, yes.
For what this is all about and how they can go about it. But we'll just take a quick break. Just hold your thoughts. We'll continue this. Capital Markets continues right after. Stay tuned. Don't go away. Welcome back. If you just joined us, you're watching Capital Market Live on Channels Television. We'll be discussing the OMO market operations, which has just been reopened by the CBN. So retail investors, which who have been locked away for about 7 years. The restriction came in place in October 2019, and then now CBN is going back to monetary orthodoxy, meaning that it's going back to normalcy, using the instruments as liquidity measures to control inflation in the country. So we're having, we still have Caleb Alimi in the studio discussing this and breaking down how you can make money from the OMO markets. Not just say OMO, going to buy detergent, but definitely OMO, where you can actually help the government, the CBN, to mop up cash and also make some money from it. Caleb, so looking at this, you mentioned that it's traded the same way as the Treasury Bills market. It's a discounted, instrument. So if someone is weighing the options right now, say looking at OMO against maybe other fixed deposits or money market fund, what should actually tip their decision to make them say, oh, let me go for the OMO? Apart from the headline rates that we're seeing, maybe the high interest rates, what should actually inform their decision? Why not just go for Treasury Bills or fixed income or money market rather than go for OMO?
So it depends on your entry point. I'll start with the money market funds. Money market funds have the lowest entry points. With as little as 5,000 naira, you can buy into a money market fund. You can invest into a money market fund. Now, there are several asset management companies that offer this money market funds. And the idea is they pull resources from a lot of people, and then they're able to invest in the fixed income market. They would expose you to fixed deposits. They expose you to Treasury bills. They expose you to OMO bills. They expose you to commercial papers and anything that matures within, say, a 1 year period. Most of their trust deeds or their operational frameworks allows them to look at investments within a 90-day period, but the idea for money market funds is that you can pool so many, small funds together, and then that's the entry point. For the Nigerian Treasury bill, the minimum entry point is actually 50 million.
Okay.
Right? So if you're buying from your bank anything lower than 50 million, obviously the bank is rendering a service to you. Right, because the bank can then aggregate a lot of 2 millions, 5 millions, 3 millions, 4 millions, and all of that, and then pull together and then approach the central bank. So they're still doing the business of financial intermediation. And it's the same thing that would apply to the OMO bills, right, because they have the same behavior. And, so obviously the bank, for you, in fact, An individual, like I mentioned before, cannot walk up to the CBN and say, oh, it's open market operations, I want to bid at this. No, you can't do that. You can only ride on the back of your bank.
Okay.
So if an individual is considering which of these investments to go into, it will depend on how much money you want to invest.
Okay.
If you're in the 5,000 naira bucket to maybe 500,000, 1 million, depending on the entry point that you have, depending on the money in your pocket and the money for investment at your disposal, you can then decide, okay, I'll do money market funds, depending on the entry point that your bank opens up to you for entering the fixed deposit market, or depending on the investment horizon. Some people want to invest for just 30 days. There's no Treasury bill for 30 days except from the secondary market, right? Some people just want to invest for 6 weeks. There is no Treasury bill for that except from the secondary market, one that has already been issued and is winding down. So that's why you have options. So whatever applies to, and then you then have Nigerian Treasury bills, which are issued in standard sizes of 91 days, 182 days, and 364 days from the primary auction. However, when you approach your bank, from the following day, it becomes a secondary market instrument, and then they can, offer it to you. OMO bills, like I mentioned before, they are not, it depends on the objective of the central bank. They can come out for as long as 133 days, 130 days, 90 days, even 7 days. The central bank can say, you know what, I want to take up all of this money for just 7 days and then watch the impact on interest rates, the impact on inflation, the impact on exchange rates and all the things, because it is an intervention tool by the central bank. So if you're considering investing in all of this, the starting point is number one, your investment horizon. How soon or how long do you want to invest for? Number two, the money at your disposal to invest, right? And then number three, the instrument you want to pick, whether it's a fixed deposit, Nigerian Treasury bill. Savings account is even still an option where you can leave your money, if you think you probably need that money within 2 weeks, within 1 week and all of that. So those are the factors that I consider, or I'd ask the viewers to consider.
Is there an entry point, like you mentioned entry points for the OMO, for maybe riding off the back of my bank? Is there any amount, or just any amount I can just go to my bank and say, I want to buy this?
It can't be any amount. I'd like to tie it to the minimum entry point of the Nigerian Treasury bills as well. I'd like to think it to be about 50 million as well, even though they haven't come out to say this is the amount. However, if we go by the operations of the Nigerian Treasury bills, it will be that.
So, but are there risk we need to take note of, hidden charges that come with trading in the OMO market?
No, there are no hidden charges at all. There are no hidden charges at all. I think a charge that may come up much later, it's going to be safe custody fees.
Okay.
The regulation, central bank regulation, does not allow banks to hold the assets of customers, other assets of customers in their custody. They must be moved to a third-party custodian. And so the safe custody fees that may come at some point of the life of the assets is often very minute, something around 0.015% by some custodians. Some charge 0.02%. Some 0.01%, just depends on the custody fees. That's probably the only charge that could come up.
Okay, so if someone wants their money back, say maybe they bought an OMO auction, maybe OMO, and they need it before maturity, how easy is it to exit an OMO position?
Oh, it's very straightforward. Just approach your bank and say, look, I bought 1 million naira of this bill and I need my money now. There are options to you. You can either use that as that instrument as a collateral, or you can simply sell it back to the bank. The bank will quote you a price, and then if the price favors you, then you sell.
Okay, so just before we go, I just want to know, right now people are saying that because OMO has been reopened, it's actually battling with equities right now. People are moving funds to the OMO auction, because we saw the OMO auction, the bid was almost 5 trillion naira in bid, and we saw that amount of, appetite for it. So what do you say right now? Do you see that movement, and is that why we're seeing that dip in the equities market right now?
No, I would say the reason why we're seeing a dip in the equities market is totally different. From what we've seen in the market, it's more of foreign participation. Foreign portfolio investment participation in the equities market has declined to almost like an all-time low. And you have more foreign portfolio investors looking to sell than looking to buy. Why? Because of the clarification around the classification by FTSE Russell of the Nigerian, stock exchange market as a frontier market, because, we're supposed to be announced sometime in September, but FTSE Russell came and said it's under review, and so that's sort of, made foreign portfolio investors that were already in the country skeptical, and that's why we're seeing a lot of capital exit that portion, exit that market. However, that capital is not totally leaving Nigeria. Some of that capital is also finding its way back to the fixed income market, or to the OMO market, or to the Nigerian Treasury Bills, or even to government bonds. So why? Because the yields in Nigeria are very, very attractive. So while you're sorting out what's going on in the Nigerian equities market, they will just keep their gunpowder dry. Again, the equities market has done more than 50% year to date, so the returns are there. But then you come to fixed income, and rather than earning nothing on your money, you can earn, due to the clarification they're seeking, you can earn anywhere between 19-20%. So it's a win-win, actually.
Definitely. This is an explainer we need to keep having in different segments of our programs for people to understand what the OMO market really is and how they can benefit from it. Thank you so much, Caleb Alimi, Chief Dealer, ProvidusUnity Bank, for sharing your thoughts on business, on capital markets, and giving us insights into how to make money from it. And
it's been my pleasure.
That's a wrap on this edition of Capital Market. Remember, whether the markets are bullish or bearish, knowledge is always your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can catch us again on our YouTube channel. I'm Will Ibong. Thanks for watching, and I'll see you next week.